The coronavirus outbreak in China forced the world's second biggest economy to shrink for the first time in decades. Factories and businesses had to close. With the virus dying down, countries are starting to rebuild. Investment expert Stephen Kam says while China's old growth model has largely run its course, the China of today may surprise you. Kam is in Hong Kong. He attended the BCI investment conference, joins us now for a discussion on it. Interesting thoughts coming from you. Firstly, a very good morning from our part of the world anyway. Tell us about China's new trajectory and where it's heading financially.
Sure. I think certainly with respect to the coronavirus, obviously you're looking at a situation where China is looking at a first in, first out situation. So with respect to what's happening on the ground, you are seeing a strong recovery with respect to the what's happening in terms of people, in terms of industry. Consumption is largely back to pre-COVID levels. Obviously, it is somewhat selective, but I'm quite jealous of some of my colleagues that are sitting in Shanghai at the moment with regard to being able to go out to restaurants, go to the cinema. With respect to the growth trajectory going forward, though, I think with respect to China, ultimately, I think a lot of investors, a lot of people understand that you are looking at growth rates that have been slowing over the past few years. But obviously, the focus for the government, the focus for China, generally speaking, is much more on the quality of growth going forward. And to that extent, the old growth model of relying on exports, of relying on infrastructure spend, that's becoming less of a driving factor, and much more so China as an overall economy is going to be focusing much more on domestic consumption as the key driver for growth going forward.
Okay, and unlike South Africa, where we're struggling to even get our heads around 5G and put everything in place in order to make it work, I mean, they're very connected in China, aren't they? What sort of impact do you think that is likely to make if there's a sort of groundswell of communications happening?
Sure. I think 5G is essentially being rolled out in China, and China should ultimately be the first country that really rolls out 5G on an extensive basis. Now, what that is going to allow companies to do, what that's going to allow the country to do, is ultimately leverage that network to improve efficiency of the overall economy. To some extent, obviously, 5G will allow for things potentially like autonomous driving, but more than anything at the manufacturing level, if machines are able to talk to one another, that will improve the level of automation that's actually possible in some of the manufacturing facilities that you're still finding in China. And ultimately, with regard to that overall manufacturing story, that will still be one that's very strong. I think that many companies have been looking for alternatives as they diversify their overall supply chains beyond just China. But at the end of the day, China still works from a manufacturing perspective, and that's why companies are set up there. It's not because labor is cheap, it's because there's a skilled labor set and the infrastructure very much works in China. So the combination of a strong manufacturing sector, strong growth and domestic investment, and then the combination, in addition to that, of strong domestic consumption should help to support the ongoing economic growth as we move forward.
Let's step back a little. Wuhan, obviously, one of the first areas to be hit by the pandemic. I mean, China was hit on so many fronts, particularly by the US. Donald Trump still today places the blame solely on China's shoulders, saying that they were behind, releasing this pandemic. How has that affected you going forward now? I mean, China relies a lot on trade. This standoff, antagonism with the US, how's it going to play out for you and for the rest of us?
Mm-hmm. I think with respect to that US-China tension that we have been seeing, our base case scenario is that will continue. I think the backdrop is one where the US is obviously the current power. They see China as, to some extent, a rising competitor. And I think the challenge is the fact that our world is now so interconnected. But to the extent that from an investment perspective, what our base case scenario is with regard to US-China tensions, it's that they will continue to persist. That, from an investment perspective, does create some opportunities for us, actually. And what we're seeing now is the fact that recognizing it may be more difficult to work with trading partners like the US, I think there is, across many companies that we speak to, an effort very much to move away from foreign suppliers who are ultimately potentially a little bit less reliable, and to move more toward towards finding local suppliers. And to that extent, there are some companies that will actually very much benefit from that and from that move. And that's where, for us, we're looking for that growth. Ultimately, from an investment perspective, we're looking for companies that will have a strong growth trajectory against the sort of base case environment that we're looking for. And to that extent, I think that self-sufficiency effort, that localization effort, will actually create opportunities for some of our investors.
Stephen Kam, good to talk to you. Thank you.